Hello everyone and welcome to Pivot Boss Masters. In this training we're going to cover studying entry scenarios with the playback feature. And this is extremely important because being able to use your platform's playback feature gives you a powerful way to review how a market reacted to key levels in the past, how major market events reacted in the past, and being able to replay those types of days will give you a really good knowledge base, an internal knowledge base on how to approach those markets in the future. So again, we're going to go ahead and look at various entry scenarios with the playback. So let's go ahead and get started. We've got one slide for this session and then we're going to jump right into the playback feature. So studying entries with playback, using your platform's playback feature offers a powerful way to review how markets reacted to key price levels and during major market events in the past. Studying these events will sharpen your analytical and anticipatory skills for the types of markets you want to engage. And the playback scenarios that we're going to be looking at are these 5 scenarios. Number 1 is the absorption signature at support. And knowing how to engage this powerful reversal pattern will allow you to anticipate its formation and identify the best trade location. It's been raining absorption signatures in crude oil lately. I mean, every single day has had one, if not more, mostly bullish, and there have also been some bearish ones. Today was another great absorption signature off the lows. We saw it start developing, and then we knew what to look for if the thing was going to run off to the upside. The stops will run above those 48 halves, and then we saw a major squeeze into the close. But again, being able to identify this pattern ahead of time can get you into this pattern before the blast off occurs. So we're going to study the absorption signature with the playback feature. Number 2, rejection at resistance. Studying rejection at resistance is a must, as the analysis and entry must be precise so you don't get caught in a squeezing market. This is perhaps one of the biggest hurdles that traders have to get over, which is being able to sell properly. Because again, the market is designed to go up for the most part. So when you're selling resistance, you have to be very careful about it. I mention it all the time. If we're in an uptrending market and you're trying to fade resistance, you better do it carefully and you better get to a scratch quickly or a break even, because if not, you're going to get caught in a squeeze. So we're going to look at a rejection at resistance in crude oil. Number 3, we're going to look at a trend day, and this is the bullish trend day in the NQ. And while trend days don't occur often, you must know how to identify them early in the day so you don't get caught trying to fade a runaway train. Again, I've mentioned this before, where even the most experienced traders get completely run over on trend days. As a matter of fact, there was some of those traders on Fast Money. One of them in particular was talking about the trend day that just occurred a few days ago and how he got run over and was, he was having a bad day in no uncertain terms, the way he put it. And again, that goes to show exactly what I mentioned before. On those types of days, you have to be able to identify them early, because if you're trying to fade every single new high, it's going to be a lot of pain coming your way throughout the day, because trend days do not give up. They are relentless and they continue to squeeze. It's a price discovery phase. So we're going to take a look at that example. We're also going to look at a rejection day, and this is a bullish rejection day. Your ability to identify rejection day is important because these days can tend to be the high or low of a given move, which gives you early insight into the next potential directional move. And again, with rejection days, you don't really have to identify it ahead of time. But we're going to look at a scenario where a rejection day does play out and how it finishes the day, because it's the upcoming day where a lot of the important entry locations can be found. So on number 5 here, we're going to be looking at a swing entry after rejection day. And this is going to be basically a retest entry into the pivot range after a rejection day ahead of a 3 to 5 day rally. And that's going to be one of my favorite types of swing trades that we're always looking for. And understanding what to look for after rejection day gives you the upper hand in identifying and executing the best trade location ahead of the next major swing move. So these are the playback scenarios that we're going to be looking at here today. So let's go ahead and get started. So this is a video. So I ran the playback feature on IRT, and then I recorded what happened. And in this recording, it's going to be just the video playing. We'll be able to stop it, and I'm going to make comments as we go along. This is going to be the absorption signature that develops here. And this one's going to be the bullish absorption signature that rallies back toward 50-20. And we're going to take a look at what it looks like. So I'm going to go ahead and play it right now, and then we'll start to provide a little commentary and flow. But what I want you to pay attention to here is not only price over here and what it's doing, but also put your eyes over here. Because over here is the order flow, right? And this is the footprint that's showing the volume delta at each of these prices. Buy imbalances, sell imbalances. It's showing the aggressive participants in this trend. It's helping you identify where those passive buyers and sellers are, those types of things. So when you study this playback over here, notice that on the current developing bar here, you'll see a lot of flipping and back and forth. You'll see an imbalance go from sell to buy, and you'll see how, maybe some major sell imbalances form down here and immediately pops up. Those types of things, keep an eye on that, because this is the type of thing that you'll be looking at live in the market. Now, this is going to be sped up so that we're not sitting here watching 3 hours worth of playback, but it's going to be sped up in a way that it's not too fast. We'll be able to see what's going on. So let's go ahead and get started with this one. So this was a few days ago, a couple days ago, and there's the major spike down right now. So this is a decision point right here, the previous week's low. You can see how price had been holding it. And then right here, it spikes through that low. Drops down through that low. Remember, outside of previous range is a decision point. We're either going to find acceptance outside the previous week's low and drop, or we're going to fail. And right here is a point where price drops down and hits S3. And as it hits S3, look over here. Look at those sell imbalances form, and then look at the reaction over here after those sell imbalances form. Look at the kurtosis that forms right here, and then look at the major LVN that's left behind at 49s into about 49.05. This is the beginning of the absorption signature. So if I pause it right here, this is the beginning of the absorption signature. And this is what was so important a couple of days ago. Because in the trading room, right when we opened it up, this is the 8 o'clock hour right there. Crude oil opens at 8, and it was an open drive down. So it sold off right at the open. Right when it got down here to 48.94, you started to see some major sell imbalances develop. And then very quickly the thing pops up. And this is sped up, but that's about a minute. 8:02, 8:03, bang, right? Now, this is the point here where right when we open the room, Brent in the room says, hey, that was a fantastic rejection down there. Pretty strong rejection at 48.94. And that's when we look at it and say, wow, that's kurtosis down there. There was major sell imbalances, and those late sellers got trapped and price pops up. Now, this is what I mentioned all the time. You don't have to get in there. You don't have to get in on that leg. You can. The way I was taught was as soon as you see these large imbalances form and you see one tick above it, you can step on it right there and try to jump in. But again, that takes quite a bit of skill to become a scalper in that manner. And again, you don't have to do that. Instead, let the reaction occur. Let the reaction occur. And so that's what happens right now. The reaction occurs, and that's the initial move up. Now keep in mind, look at the previous week's low here. This is the level that gave up right now, and price went offered through it. When it came back to it, this is where bears that were trying to extend the range got short. So those bears got short, and this thing drops to new lows. So these bears are like, wow, that was good. But as soon as it hits that, it pops pretty hard, okay? So these bears are short here. They get paid. They got short here. And now price is back up to this zone. This is about the area where after the first move up, this is about the zone where you would normally expect a counter move now. This is where the absorption zone starts to develop. And what I mentioned before, the absorption zone usually goes from this low into about an LVN. That's the absorption zone. Oftentimes I'll say the midpoint, and everything has a little bit difference. But if you find a rejection like this and it pops back above that low, that's the edge right there that you want to watch. Okay? So every time I'm looking at some sort of significant rejection, remember this is 49s, this is S3, major sell imbalances, and a big reaction. So the first thing we said in the room was great kurtosis, great rejection, great LVN here. The first pullback is going to want to be defended by bulls for a shot at bringing this thing up the ladder, right? So this is how it plays out. Price comes into that high and bears come in and defend that rotation. Now here's the point right here where you can bring that off to the side, and that's about right there, right? And you can see it front ran it just a little bit, and right here, sell imbalances came in and a squeeze occurs. That's pretty fast, right? Now some of these stops are getting run above the highs, but it didn't get acceptance, but this is now the zone. So any rotation into this area, and you can see the recent low now. So you have this low to pin yourself off of and this low. That creates a zone now. That creates a zone. So we know that after a significant rejection, the market will tend to come back to that zone. And over here, you want to see big sell imbalances start to build near that support. Here's some sell imbalances, and you're starting to see it pop right back up. This is the trigger zone right here. That's the entry zone. Anywhere in here. And what we talked about in the room was with these bulls defending, and you're seeing sell imbalances here, it also tells you that there are now sell stops building up below this LVN. So if this thing would have broken down below 49s here, we may have seen a major sell-off coming, right? But that's why this entry zone is so good. Because, and then right here we see another 200 contracts, 700 total, and it pops right back up. Now this is about the point, and I'll pause it right now. This is about the point now where we're heading into EIA. And that's when I cautioned here that if this thing breaks below here, we could drop. But this is the absorption signature that is built out. You got a strong rejection off of S3 with great sell imbalances, great kurtosis here. The reason I mentioned kurtosis, a volume profile here, and this is basically a stat that just pops off that profile, right? Little data point, and you see how much bigger it is than kind of the surrounding points around it. That kurtosis right there, leptokurtosis, it's sticking way off the profile. That just shows you that there was significant volume at that one zone. And when it's at a fat tail event at the end of a statistical distribution, it's very significant. Very, very significant. And so that's why we had lots of conviction here, because that was a significant data point. Now, I'll be honest, this was a little bit smaller than normal, but it was there. Sometimes you see it stick out like a big ledge, like it pops out like this. And if you ever see that, it's significant because that's a major market participant that's coming in to try and find a floor, right? So this is pretty big. Now, we know right here, this is what we talked about in the room. Bears were taking price through the previous week's low. They were defending here. They were defending here. They're defending here, defending here. These are bears defending the previous week's low. Meanwhile, we have higher lows going into those prices. Again, that gave us additional confirmation. So what I mentioned was, with these bears selling here, they're starting to get paid less and less. It's their buy stops which are going to trigger this next move. And the goal would be bringing it back toward R3. And if you're rejecting the previous low, you bring it back to the previous close. That's the major goal here. Now, usually I'm saying bring it back to VWAP, right? Usually I'm saying bring it back to VWAP, but in this case, I mentioned there was lots of bears here positioned, which means there were lots of buy stops like this. So if price were to push into VWAP, those buy stops would likely trigger through and bring this thing much higher, right? So that's the goal, is push through VWAP and take it bid up to this zone, followed by the potential to break through 49.63. So earlier in the pre-market report, I said, I think there's a good shot to try and break through 49.63 and run the stops above here and get it higher into about 50.30. So So this is how it plays out. Boom, boom, boom. There's the stops. Bang, bang. Big time move right away. Now if I stop it right here for a moment, notice this. This is where the major squeeze begins. Because very similar to what I mentioned yesterday, if you're in a downtrending market and bulls have huge buy imbalances at VWAP and they can't get it to go bid, capitulation starts. Likewise, if there's a lot of sell imbalances here at value, trying to keep value offered in a downtrending market and they can't keep it offered, boom, the thing will light up, right? So this is usually the death knell. If you see major sell imbalances form at VWAP in a downtrending market and they can't keep it bid or keep it offered, then these participants get stuck and you see this thing squeeze. So that was very, very important. Now after the major squeeze here, the first thing I mentioned is any pullback likely to be defended. We didn't quite get that. Instead, we went right to the previous week's close and within a tick of R3. There it is, now into R3. But look at the move here, right? Big time move that comes. And this isn't a special scenario. This pattern has formed each of the last 3 days in crude oil, at least once. And we've seen significant rejections each and every time after the signatures occurred. So again, very, very powerful the way that played out. Now you can see up here, this is about the spot where a lot of profit taking is occurring. For anyone that got in the trade here and gets lifted up to this zone, that's a profit taking zone. So you have to be able to take some profits there, right? It's the only logical spot. That's why it's sitting there for so long doing business, because traders are doing business there. They're changing hands. But as long as the price structure remains intact, our idea was that this thing would continue squeezing higher. And just now we reached the primary target for the day at 49.77, and then we continue to push up, and look how it goes, right? Now, at about this point in the trading room, we identify 49.70 as the next LVN and the key level there. It's also outside of R3. So any pullback into that zone or shy of that zone is still a buying opportunity for a continuation into about 50.70 or 50.30 is what I said. And this thing continues higher and starts to push outside that R3. Now this is when you think, wow, this is really strong and I want to let it ride. If you have some more on here that you say you scaled heavy here and you have some trailers left, some additional scales, once price really bursts through R3 and drives, it starts a price discovery type of move. And again, the ledge right about there is very important. Do you see this ledge right here that's developing, that LVN? That's about the spot where bulls want to defend within the uptrending market. Right there. Let's see what happens. Look at that right there. So it starts to hold a little bit. Over here, you can see quite a bit of sell imbalances right there. And they don't get paid, and you start to see the thing go up yet again. So 49.70, do you see that LVN that it left behind right there? In a bullish trending market, in a price discovery phase, bulls want to defend rotations to LVNs from above. So when this thing pushes up and comes into this LVN, bulls want to defend the LVN. And overall, this thing continues to hold. Now it's coiling up. Over here, you see that sell imbalances are still very, very thick in this area. And yet every time it forms, it pops up a little bit. So overall, again, this is just a continuation toward where we thought it could go. But the whole point of the playback is to identify the major rejection point. See what it looks like when a sell imbalance hits and a reaction occurs. if you don't see a major reaction like this at an edge, then you have to be more careful. And that's why I say sometimes just let the market react to an important key level. Just let it react. Because if you see a significant rejection like we do here, like Brent called out, then we know exactly what to do from there, right? We know where to position ourselves. And then, as I mentioned before, this is the spot you want to get into the trade. Not here necessarily, right? This is like getting on the bus at the bus stop, and this is like trying to get on the bus as it's moving. This is where you get flattened. This is where it's at. And you can see, again, the power behind this one little pattern right here, and look at the energy that it's released so far. And here we are testing the bottom of the weekly pivot range. This is when we hit 50-20, and that's pretty much the high of the day that comes in. But again, look at how powerful this move was, all based off of this one little signature right there. Because this is the pattern that builds the energy. This is the rejection that gets late sellers trapped, and once price pops up here, oh man, they're in a world of pain. More sellers are trying to pile in. These sellers are trying to pile in. And when they finally figure it out, you know what? We're not getting paid. All of the stops come out. So this was a fantastic example, but again, it wasn't the only example we've seen in crude. I could have picked one of probably 6 or 7 to choose from over just this week alone. And these moves, on average, at least during this week, have been 1 point, at least, in expansion. So this right here, from 49.20, it went right to 50.20 from the breakout point. And from the absorption point, it was even more, right? And on average, these signatures are given about a point in the current market. So these are huge explosive moves. And again, your ability to be able to forecast or anticipate that this may happen is very powerful. But even then, you don't have to. You just have to watch it sometimes. And if the thing rejects, you see it reject, you see the reaction, then let's look for those ideal entry locations. And then you got to continue to watch those rotations. Continue to watch to see, are there sell imbalances? Are there sell imbalances down here, here, or here, right? And there were, and that's exactly what you want to see, because by seeing sell imbalances here and seeing price pop up, that tells you there are major passive buyers with limit orders that are just absorbing all of those late sellers, and this tends to be the result. But I always have to say, just because the pattern develops doesn't mean it will play out. If, for example, this would have rejected here instead, then the stops would have come out below 49s, and this thing would have been hunting much, much lower. So just because an absorption signature develops doesn't mean it necessarily has to play out in the favored direction. Failed absorption signatures are very, very powerful as well. Now, failed absorption signatures, as I've mentioned before, usually are seen in a downtrending market, right? So the market's going down, and then all of a sudden, here it is right here. So the market's dropping, then it does this, and does that, and you think it's going to go up, but it's a downtrending market, and it does that. Then it does this, right, and then it tries it again, and then boom. And so that's what I call a value trap. It looks like it's a good value every time, but instead it just continues to roll lower. So in a major, major downtrending market, you want to be cautious, because the first one of these that fails, it's going to lead to all the rest failing as well until you see a significant rejection. But again, if you can just study these patterns here, right, study this setup, you're going to be able to play any entry you want on an intraday time frame and in a higher time frame. So this pattern develops, and it can develop over the couple of days. It can develop in a couple of minutes. It can be very large. So in a daily time frame, it could be, it could be several months sometimes. Most of the times, the ones I like to play take a day or two to develop, and by day 3, they are lifting up big time. So this is a powerful, powerful pattern. And again, what I always mention to traders in my room is, when you see events like this or see days like this, it's very important to make a note of it. Take a screen capture and mark it up. so that when you see it next time, you can engage it, right? Or use the playback feature. Take a video and store it so that you have it ready to go. These types of things are very important because it keeps you on top of what these things are supposed to look like in real time as they're developing, because that's the point. So here's a good question. What do you do about all the pivots on the way up? Are they profit targets along the way, or can one confidently maintain full position to top? Okay, now in terms of full position has gotten me inconsistent results throughout my early career. So that's why I'm such a stickler for scaling. But when you do have an absorption signature that starts to play out, I think the full position can take you to at least R3 if you wanted to go full position, right? And so if this thing is bouncing off S3 and you're building this is the energy to easily get you here. So if you wanted to play full position, I would say that. Now in terms of all these other pivots, I'm not so concerned about those all the time. It just depends on the situation, but you do have to pay attention, right? This is a major pivot and then price goes bid. This was a major pivot and price goes bid. Those are the most important. But the even bigger pivot is this one. That's the one that's dictating everything. It's the previous week's low. That's the one that dictates so much of these major market moves. And so when price got outside that previous low, that's where major participants came in, created a floor, and then brought it back to the previous close. So right here, that's the high odds target if you're going to hold full position. But if not, at times, I mean, some of these patterns, especially when I look to do the swing patterns, they go 3 to 5 days very quickly. And so you can obviously play full position that way. There's options. There's all kinds of ways that you can do that as well. Now, in terms of which ones are profit targets or resistance, these flags right here, that one, and that one, and that one, these green flags, those are scaling targets on the way up, primary target and secondary target. So from this low, it's forecasting average daily range to the upside. So average daily range over the last 10 sessions would take you from this low precisely to 50.04. That's an average day's range over the last 10 sessions. And so those offer additional targets that you can play to in that manner as well. So these aren't necessarily pivots, but these are targets. And then the rest of these, it just depends. And then here's a question here. So a failed absorption signature is usually a value trap. So I think I say after the first one fails, it probably turns into a value trap as you continue downward. So the first one might, so if, for example, if that's a significant support and price comes down and does something like this and starts to build, this is still a good spot, right? It's not a value trap there, but boom, as soon as it does this, and then it starts to try and do it again, then you might get caught in the pattern where you're doing this. And the recent example of that is if you go to the daily time frame in gold. That's where we had the major sell-off after the election, the U.S. election back in November. We sold off from 1338, dropped all the way down to about 1120. And during that drop, we were seeing absorption signature after absorption signature develop in the daily time frame and intraday, and they were just failing and failing and failing. But when they do fail, we know exactly what to look for, and it doesn't mean that we're going to lose money, because that's where scaling is very important. Because even if it fails, you can make money because of your scaling habits and how you've built a position and those types of things. But for the most part, once the first one fails in a trending market, then your goal is to become the participants looking to create the next failure, basically. So you know bulls are going to try and come in and hold, so your job is to come up here and look to sell. So that's what you would do if you were looking to play a failed absorption signature or potential failed absorption signature. All right, let's look at the next example here. All right, so this one is rejection at resistance. And for context, the previous week here, so this is Monday morning, the previous week was very bearish, like this, and this is crude oil. And it's sold off and closed near the lows of the week. And then what I mentioned to the traders in the room Friday was any pullback to the pivot range the next week, likely into 50-20, offers an opportunity to sell on a swing basis for a move back down into 48-42, that lower FOMC level. So this is a swing entry opportunity here, but it can also be an entry that's played on an intraday basis. But it's also just a significant rejection that starts the week with a rejection, and it helps you stay in the right direction the rest of the week, or at least in the days that follow as this thing continues downward. So let's take a look at this one. So here's the push right into 50-20, and there's immediate rejection. Over here, we have about 600 contracts buy side, and these were buy imbalances here that immediately went off. Do you see how fast that was? I know this is sped up, but at the same time, 600 contracts buy, and price rotates lower. You get more buy imbalances, rotates lower. More buy imbalances, rotates lower. That's a major rejection. And again, you don't have to get short right away. Now that you have a major rejection here, above a key pivot and into our key level, and then you break back below the previous pivot low, the next major bounce becomes the entry, and you want to look for buy imbalances up there that get trapped. Right there, buy imbalances. Now they're starting to get trapped, and it's done. It's a done deal now. Did you see that? So this is the first bounce up. And as I always mention, after the rejection, the first bounce, you want to see buy imbalances. That's the entry. That's the retest entry. And so you want to see that. You see these buy imbalances? Boom, drops. Comes back, more buy imbalances, boom, drops again. That's what you want to see. That's rejection. Now you see 3-point reversal right into our zone, and you're seeing rejection. The next thing you're seeing is buy imbalances coming into VWAP, and these buy imbalances are not getting paid. So in an uptrending market with an uptrending VWAP, you get buy imbalances here that can't keep value bid. And when those late buyers can't keep value bid and they're absorbed, what happens next is usually decline. So that's what happens right here. Now, when say you trigger an entry based off of this shakeout leg here, and we'll go ahead and pause it right now. Say you were looking to get short the 50-20s, right? This is what I mentioned, and I said this Friday. This is Monday morning. On Friday, I said any pullback toward 50-20, that's your selling opportunity on a swing basis. So that tells day traders, I can sell that level on a day trading basis, because if it's a swing level, you might see a bigger move than normal. That's why I go higher time frame analysis and bring that higher time frame into the lower time frame. Because a higher time frame key pivot provides a bigger reaction on an intraday basis than just trading some intraday pivot, right? And so this 50-20 was a big time pivot. This is a weekly, the bottom of the weekly pivot range. Both of those rejected twice. The shakeout leg, major buy imbalance right there. Quickly rotated back to value. Went through value, and look at all these buyers here that come in and they cannot get paid. These are late buyers to the move here. They're stuck. They're right here on value, and then it goes offered and it cascades lower. So if you did trigger an entry on the shakeout leg, I always say follow the footprint for order flow and manage the trade through order flow. Because if you start to see all of these buying balances here, that tells you that sellers using limit orders are rolling down their resistance, right? So up here they trapped, they drop it, and they're absorbing here, and it drops. Look at all these buying balances that come in here. That can't be good, because in a downtrending market, the more buying balances you get that don't get paid, the more fuel is added to the fire. So ideally, if this thing was going to bounce and go up, you want to see stuck sellers. But instead, you're seeing trapped buyers all the way down, and this is big. These are big volume, right? So let's keep going. So right here, we're retesting VPOC after a shift down. Took it offered. The VPOC shift was also offered. Here's the first major target right there. That's the previous week's close and the previous session's close. So that's the Friday close. As I mentioned, before, if you're going to reject up here, the first major target is the previous week's close. The second major target is the previous week's low, because this was a swing selling opportunity. So this is a swing entry, and it's just a rejection at resistance, right? And so if you're rejecting the pullback in a downtrending market typically leads to new lows. So that's why the major target on this day was the previous week's close here, and also a drop into the previous week's low. And so that's what you're usually looking for right there. You're looking to see how does this thing play out at the previous week's close, and you see it when offered. And then you see the retest right there. The retest also shows over here a big time drop. So let's pause it right there. So a nice continuation to the downside. Look at all of these buyers that come in. Buyers, buyers, and buyers, and buyers, and they're not getting paid. That's significant. So to the question earlier about keeping a full position, this is one of those scenarios where you have a swing entry at 50.20. And in the pre-market report that morning, I said, bears want to defend 50.20 for the previous close and the previous low. Both of those were hit that day and in the morning. That's how you can keep a bigger position. So my goal here is to trigger somewhere, right? Doesn't have to necessarily be at 50.20. You can put your limit order there and play that way, or you can just wait for the rejection. And then after you see a rejection, there's a retest somewhere, right? But my goal first is just get to a T1 so I can scale half, and then from there, take advantage of those lower targets on scales 2 and 3 or more, depending upon if I add back, etc. So that's a way right there where after you get, T1, these are the big targets. But even then, if this is a significant rejection enough for you, these could be your targets easily. So again, in a downtrending market, so in crude, we had a major sell-off the previous week. This was Monday, Tuesday, Wednesday, Thursday, Friday. The pivot range was here now for the upcoming week. And I said, okay, in a major sell-off week, the next week, you want to see the first pullback into the pivot range. You want to see rejection, and you want to see new lows. That's what this setup was about. That's what that trade was about. And it played out perfectly. But I wanted to show what the order flow looked like at that time. Major rejection up here, major rejection there. And then every time price tested a value level, it was offered. And then here's VPOC right here being offered. The open offered. And this thing just continues to drop. It pushes through the previous close here. When it comes back, offered. And that's right here at this area, right? And you can just see all the buy imbalances and how this thing had no chance at doing anything. And that's one thing. When this thing gets going, when a market gets going in a unidirectional trend, one way or another, look to see if there's a preponderance of imbalances that are just being absorbed over and over. These were huge imbalances that were just getting driven lower, 2,600, 1,400, 400, 1,200, and it just continued to push lower. So again, this is one of those times where you have a major rejection at an area that you anticipated and forecasted. Not just right ahead of it, but we forecasted this thing before the weekend started, and it happened nicely. So that was awesome. Great move there, and again, a significant rejection at these highs. All right, so here's the NQ. Now this is the bullish trend day scenario, and I'll go ahead and push play. Now, heading into this day, what I mentioned with regards to the ES was we're going to watch for a trap event. But as soon as that trap event doesn't work, we shifted our idea to this is likely going to be a price discovery phase, and the highest odds trades right now favor buying dips. That was the goal. So this is how the day started here, and this was pre-market, and you can see how this thing pushes up in pre-market. This is 7-something in the morning central, and look at the drive. Look at these moving averages go sloped and stacked. Look at this LVN coming into view. See that LVN come into view? Look at this LVN come into view and look at it drive. This isn't the entry. But after this drove pre-market, so this is pre-market. Right now we're still about a minute out from the open of the day. So in the trading room, this is like, wow, that was a strong move we just saw in the ES and the NQ. I think this is going to be a price discovery phase now. Let's look to defend pullbacks at a number of spots. The easiest is to bring up the PIMAs and look to defend pullbacks to the trigger zone. Additionally, based on volume profiling and market structure, in a trending market, you want to defend rotations into LVNs. Because as this thing pushes higher, it leaves behind an LVN. As it rotates back again, the LVN is defended by bulls that want to keep the current price action bid, right? They're defending the trend at the LVNs. So what I mentioned right here is that when the market opens, the first pullback after the open into this LVN is a zone where you want to buy, and that could be the first entry. Now keep in mind, what I've mentioned before with regards to trend days is whenever you start and you have a high odds that this thing may turn into a trend day, the first entry, you can hold on the rest of the day, or at least the rest of the morning, right? If you can get into that trending phase early, then you can hold on and make this thing last. It's hard to do sometimes if you're normally used to just intraday day trading scalps, but it's not so hard if you're used to swinging because you're used to holding 2, 3, 4, 5 days. But I remember I found it very difficult to hold all day sometimes because I was much more of a quick, nimble trader. And then when I finally was able to say, you know what, I think tomorrow's going to be a breakout day, and I want to get in early, and I want to hold on the rest of the day until the close. And I wrote about this in my book too, Secrets of a Pivot Boss. And what I talked about was being able to forecast when the next day may be a significant expansion day. And one of the ways I did that was using the pivot range. One of the ways that I used to forecast was the pivot range. So here's a pivot range. Maybe the next day was inside value. And that's how I would know, you know what, the next day, if it opens out of value, out of range, or if it breaks through those highs, we could be looking at a significant price discovery phase. If I can get in early, I can hold on all day, right? Or at least to the morning, throughout the morning. And that could give you a big move. Now, on these types of moves, the best deal is just to grab the first pullback into the trigger zone, LVN, or wherever you can, with sell imbalances. You want to see sell imbalances on that pullback. And then the goal is to drive it to a new high, right? The other goal, if this is going to turn into a major trending day, the idea is to take it to 100% expansion, 75, 100, and perhaps even as far as 125. So you can do that as well. So let's play this again. So here's the open price. And there's the first pullback after the open. Here's the LVN. It's about one tick off of it. Sell imbalance is there, and you see it push up. Here's a retest. Minor sell imbalances, and it pushes up. The LVN remains intact. These pivots, based EMAs still sloping up. Very, very strong. And you see it hold up here, but there's the test right into the zone, and it's right ahead of the LVN here, and you can see it hold and go. Again, this is not hindsight because this is exactly what we did live in the room. This is the exact same analysis we provided live in the room on this day, which was, I think we're about to be price discovery, the best opportunities to buy pullbacks, look to defend LVNs, and look to defend PIMAs. The other thing you can do is look to defend R3. R3 is a really good pivot to defend as well on the R3 bands. Look at this thing drive. The next pullback here was at the open, 55.25, and it drove hard. Now, the next LVN has revealed itself right there. That's the next LVN. As this thing drives, you're going to see the next pullback, and it's going to be into this LVN, or perhaps into this trigger zone right there, and that's the next area to look for sell imbalances and a bounce. So here it is, a little bit of a pullback, and there it is going into the zone here, and look at those sell imbalances right there. A lot of sell imbalances and price ticking up. Coming back again, more sell imbalance, price ticks up. So right there, into the LVN and into the trigger zone, bulls are coming in and rotating price back up off these sell imbalances. And so in the room, we've been seeing a lot of this, especially the clash between aggressive participants and the passive participants. And the aggressive participants are these parties right here, getting in with market orders. They were selling down here, trying to break this thing down. Meanwhile, limit orders by passive bulls were defending, absorbing, and looking to rotate higher. Next LVN is starting to reveal itself. You see it? Look at the profile now, right here. You see that profile? It's elongated. I call it an I-shaped profile. It's an imbalanced phase. It's a price discovery phase. It's elongated for a reason. There's no value on this day. On a day like this, every time value shifts up, it goes bid and bid. That's another indication that this thing is going up, right? So again, very, very bullish the way this goes. This is the LVN behind here. They held it very briefly before they rallied it. Didn't get into the trigger zone. Now the next push into the trigger zone. Look at all these sell imbalances right now. There's some buy imbalances down there too. And it's right into the zone. More sellers right there trapped, and the thing pops up. You see how sellers tried to get this thing to go down, and it's failing at the moment. This was a big sell imbalance and pops right back up, and here we are again off to the races. Now this thing pushes up and starts to form the next LVN. You see the LVN showing up its face right here? Boom, it's starting to come into play right there. Now this is what I mentioned in the room. This will continue until it stops. This will continue until it stops. Bulls are designed to defend and squeeze, defend and squeeze. Every time it rotates into the zone, you want to look to trap and squeeze until it fails. Until it fails. The first time it fails, now you may have created a range at highs, and you might see a trading range market develop at highs. That's what we talked about in the ES. That's what ended up happening in the ES. But the NQ just continued for the most part until the end of the day. We're right here. Okay, now this is a spot where we can, right here, check this out. We've gotten a couple of dips now into this zone. We have some sell imbalances again here, and it rotated up. But now notice something. In a trending market, ideally, it's like this, right? You drive past that previous high, you make it support. You drive past that prior high and make it support, right? As soon as the market starts doing this, right, where these highs are no longer driving and instead it's having to rotate back to try and entice buyers to come back in, like it is here and it is here, it's having to come in, things might be slowing down a bit. So that's a caution point. Well, and there's a drive. Very, very bullish trending market. Here's a VPOC shift up, and that was the cause there. So every time VPOC shifts up in a unidirectional trending market, ideally it goes bid because the market's going up. Here's an LVN. There's the trigger zone. Right now we got some sell imbalances. Now look at what just happened right now. We had buy imbalances and the thing pushes downward. Look, more buy imbalances. So now the thing is changing. This is what I said. It keeps going until it stops. And then right here, bulls came in to defend yet again. Off the 51s. They were trying. All the 51s are everything in here. And they tried to get it to go up. Then it came down. They tried to get it to go up and it came down. But look at all these buys now that are coming in the zone and they're just not getting paid. So now things change. Now you may have formed your high for the day, and now you probably pull back and chop in the zone, right? And that's what we talked about in the ES. It happened earlier. The NQ continued, and this is where it fails. Look at that, more buying balances can't get it going. So there's a difference, right? And so now you can see that. You can see how it played out. You can see how buying dips at the trigger zone with sell imbalances works. You can see how defending the LVN works. But as soon as it stops working, it's done. And so that's what I usually mention, is that your goal is to trade 2 or 3 rotations in a trending market. But as soon as it fails, you're probably going to create the impulse move that creates the next range. And so what I mentioned is you get a trending market, it's a price discovery until you get a spike high, you pull back, and now that perhaps creates the boundaries for the range to come. That was your spike high. Happened right off 57.25, dropped into the zone. Ideally, this is where bulls want to defend, but they couldn't get it going this time. And that creates the impulse move down. So a great trend day structure there that ended up playing out. And there was many rotations, and you could see every time price came into the zone, that's where bulls were in there defending all of that area. Any sell imbalances that came in were absorbed, and then you subsequently saw the thing rotate higher. Very, very nice. Here's a great question here. Should one only consider a rejection a major one if it happens at a key level, like a previous week high, as opposed to something that could just be a pullback to continue up? That's a great question, because that's the point that I try to make all the time, which is look for rejections at the most significant levels, like a previous week's high or low. Those are the most important levels. And if it's not a previous week's high or low, then it has to be some sort of impulse move, right? We have impulse ranges, the key range. So I have a key range, right? You have a move up, a strong move down. If it bounces to the midpoint, now we have edges to play. So it doesn't necessarily have to be a previous week's high or low, but it has to be a significant impulse high or low. So it doesn't necessarily have to be a previous week's high or low, or previous month's high or low, but it does need to be an important edge, in my opinion. Those are where the most significant rejections occur. If it's not one of those, then you may see some sort of rejection, but it might not be significant. But again, this is pretty powerful when you're able to look at these areas, identify who's attempting to do what, and then just look to see if they're winning or not, right? But a very bullish trend, you don't see these often. My initial idea, and the pre-market stated that day, look to trap, because we're coming into the previous high. We're coming into 76.5 in the ES, and if price can't hold 76.5, watch that area to trap it and bring it back down. And price pushed above that 76.5, and then the next thing you know, it squeezes right away. There was no rejection. That alone right there just shifted our bias, and we went bullish, right? We went trend day structure. I mentioned how to play it, and then we're in it, right? So again, being able to understand how a trend day develops, what to look for, where the best entry zones are, how to confirm those entries, very, very important. You got to be able to know this like the back of your hand, so you can know what to look for, analyze it live to see if it's happening, and if it's not, you don't engage it. If it is, you engage it. And this is one of those great examples where that trend day structure played out very, very nicely. If you cannot identify that it's a trend day early, there's a good shot that you can get run over, because as traders, we're taught to fade a high, fade a high, fade a high, right? And that can be very difficult when you're in a trend day structure creating lots of highs. That's lots of opportunities to get your stops run, right? So you have to be unidirectionally with the market. You know, if it's trending higher, then you got to be buying dips for the most part, unless you get to a significant edge. Then you can look to fade. All right, the next playback scenario that we're going to take a look at is the rejection day. And the rejection day is one of the most powerful signatures that you can come across, but it's not one that you have to anticipate. This is what I tell our traders in the trading room all the time, is that let a rejection day play out. If a significant rejection day does eventually build out by the end of the day, we'll know how to aggressively enter that the next day at the best trade location for a shot at seeing a multi-day move in the opposite direction. And this is one of those days where a rejection day does develop, and it sparks a very clear multi-day move to the upside. Let's take a look at the daily chart for a little context first. If we bring up IRT here, you'll see basically right here, this is the rejection day in question right here. Very significant rejection day tail. And if you recall here, back in the trading room on March 1st, this was a significant day, a big trend day up. This was about 298% of average daily range up to that point. I mean, look at the range on that bar compared to everything else ahead of it. It was a significant day. And once that day was formed, what I mentioned to our traders was, if the next day here is a day where the close is below the open, we could see an extreme reversal back down toward 2365, 2370, and that's what happened. And then once the impulse move occurred here, we were looking at 2354 as a major pivot. And once price pushed through that pivot, we were looking for price to come into 2300 to 2310. That was our swing buy zone because it was a significant LVN. Remember, just like the NQ uptrending example that we saw a little bit earlier, where the market's in an uptrending structure, typically speaking, the market wants to continue higher, and then bulls want to come in and defend LVNs. Push higher, defend LVNs. Push higher, defend LVNs. This was a significant LVN. 2300, 2310, that was a significant LVN, and it still is in the charts. So I mentioned to our traders, I mentioned in the pre-market report, that any push into 2300 to 2310 offers a significant buying opportunity for a shot at retesting the highs back toward 2376, 2380, 2390. And that's pretty much how it played out here. Was after this major rejection day, we saw a nice little swing move up into about 2366s. And then over time, we did go into those highs. But this was a significant move. So let's take a look at how that day played out. All right, let's go ahead and run this playback. So now that the playback is underway here, you can see the open price comes in right at about 2321s. Price over here pushing down near the low. Major buy imbalance here. Turns to a sell imbalance. They get trapped and price starts to push up a little bit. That's the first indication of trapped sellers, and this thing starts to rotate higher. So right now we have a significant overnight low right here, 2317.75. We have a failed new low. This is a higher low despite the lower highs that are in play. Now, live in the market, we did not know if the low was in just yet. At the time, we were looking for 2310 to 2300, more like 2310. That was the major area. We came within 7.75 points of that level. But given the downtrending nature of VWAP, given the lower highs that we were seeing, we were looking for bears to defend, and we were looking for signs that perhaps if there's a rejection, then these stops would start to come out. So as this thing continues to play out, you'll notice here's a low right here. Look at all of these sell imbalances that came in. That's 2,000 contracts. There's another 1,000. That's 3,000 contracts that don't get paid, and this thing pushes up a little bit. More sellers starting to come in right now as it's holding these lows. But price is really trying down here to push down, and it's just not doing it. Just not doing it. That tells you that there's perhaps large OTF passive buyers that are sitting here with limit orders, perhaps iceberg orders looking to keep that a floor. Now keep this in mind. Whenever price is in a downtrending market, algos, programs, institutional traders, they're all looking to sell VWAP, right? They're all selling VWAP on the way down. They're selling pullbacks. But as soon as price cannot establish new lows, that's when they change bias, and that's when they start hunting the stops back above the prior pivot high and perhaps beyond value. And that's what's starting to happen right now. Now, if we pause this for a moment right here, you'll notice on this rally right here, there's a ton of sell imbalances left in the wake of this move. All of these sellers getting trapped on the way up. And the one that really does it is the one that happens right here at VWAP, and that's right here. One tick below VWAP, 3,700 contracts, sell imbalance comes in. That seller or those contracts get trapped and price pushes up then the buy imbalances come out and the stops come out and the thing drives higher. Look at how price pushed above VWAP here and drove hard. That's a good deal. So now any pullback into VWAP should be considered a buying opportunity for bulls looking to defend for a shot at squeezing to new highs. That's the idea. That's the opportunity. Now, let's go ahead and push play and let's keep this thing going. Now, as this thing continues to drive up, look at it test this recent high right now. This is where bears on this ledge are keeping this area offered. That also tells you that's where the buy stops are, right? And as price pushes back toward VWAP, we're looking for signs that bulls are going to defend. And right now, we see some some sell imbalances that come in, and price immediately pushes up right on VWAP. Price comes back down again. There's a test of VWAP. More sell imbalances go bid at the moment, and price is holding strong right now. So at the moment, price is holding price structure. This is price structure, that previous high down, and then price pushes through, and it's holding that price structure at the moment. That's very important because these bulls are trying to keep value bid, and they're looking to squeeze yet another leg up. Again, we don't know if this is going to be a rejection day just yet. We just know that it's a major sell-off to begin the day. We got within 7 points, within 8 points of reaching our major swing buy zone. That was our, 80 to 90 to 100 point buy zone. And then the bulls came in and started defending a little early. So that's something to keep in mind. Right now, bulls trying to keep VWAP bid, major sell imbalance of 1360 contracts here rotates up. More sell imbalances piling up right here on VWAP, and things are still being bid up. So that shows you bears are trying to push price through VWAP, and they're just not getting paid. If those bears aren't getting paid, the buy stops are likely going to come out. And the buy stops, as we mentioned earlier, are above this ledge, above 23.28, above 23.29. And now you're going to start seeing them come out. This recent pullback, a lot of sell imbalances, and this thing rotates higher yet again. So right now what we're looking for, again, is for price to continue to push up, and perhaps if this is going to turn into a rejection day, you've got to get back above the previous low. If price is going to push higher, we got to get back above the previous week's low. That's the important level right now. That's where the rejection is happening. So by the end of the day, are we above or below that level? That's the important pivot right there. That's what's going to tell us if we are rejecting those lows. And at the moment, lots and lots of imbalances are showing. These sellers trapped, rotates higher. These sellers trapped and currently up. These sellers starting to populate in here at the moment, and we could be looking at more highs. And here we are, starting to push up. Big time push up at the moment. And again, look at all these trapped sellers right here. These are sell imbalances with sellers that are hitting the bid, hitting the bid, hitting the bid, and they cannot sweep those resting bids. That's very, very important. That's indicative that there are massive passive buyers using limit orders that are continuing to defend. Look at it again, right here in the 23.28, again, another 4,000 contracts right here that were rejected, absorbed by passive buyers using limit orders. Those sellers using market orders are being absorbed, and price is pushing higher at the moment. Again, it really gets interesting above the previous session's low. That's where things really get very, very bullish, and this thing starts to squeeze through that zone at the moment. Now, anytime you're pushing through that area, any return to it could be an opportunity to defend and continue to squeeze. But this day continues to roll higher. In the wake of this move, you can see sell imbalances coming in, and they're getting trapped, right? That is super significant because, again, just think about it this way. If you just sold 4,300 contracts of the ES at 33s and price goes immediately up, you are in a world of hurt. And now your buy stops are going to fuel the next push up. Look at how this thing continues to push up. Right now, pushing into 35s. And again, leaving behind the LVN at the previous session's low, a big time level. Any rotation into that zone can be a great buying opportunity for another push up. And as we speak, we're testing that level now. We're seeing sell imbalances there, and we're seeing price rotate higher. Look at that. That's 3,000. That's 2,500. That's 1,300. Another 600. Add that up. That's a lot of sell imbalances that do not get paid. That's the fuel that lifts this thing higher. Look at that continue to push higher. That's the process here when you're seeing significant rejection. This was a major rejection day that by the end of the day, we were trading 23.38s, 23.39s, and that was a major move from these 23.17s. We did not spend a whole lot of time down there. A significant iceberg or market participants were absorbing, and a significant rejection occurred. So again, if we take a look at the daily bar chart, going back to the daily, here we are. That's the day right there. Remember, we saw 23.18, 23.17s, 23.19s being rejected, and that's also below the S25 weekly pivot. So this is the S25 pivot boss pivot on the weekly basis, S25. That's the 25% expansion of the previous week's range. This pivot right here is the midpoint of the previous month's range. Here's the previous month's range right there, right? And now that's the midpoint after rejection. So not only did price reject off the 25%, that's the monthly R25 pivot boss pivot, rejects there and goes back to the midpoint on the monthly pivots. That's a significant bottom, a significant top, and that's what we were looking for. In our trading room, we said this is a big rejection top. We should be looking for a pullback to the previous close and low. And if we push through this 54 low, we're likely coming into this LVN, and that's where we want to trap and rotate this thing back up. And that's exactly what OTF responsive participants did on this day, closing the day well above the previous week's low. So let's take a look at day 2, because day 2 is the swing entry. If you did not enter on this day, you don't have to. Sometimes it's clear that that may be a rejection day. Sometimes it's not so clear. But there's always an opportunity to come after a rejection day. So that's what I tell the traders in the trading room all the time. Let the thing reject. Let a market reject a key pivot or a key price. Let it reject. And after it does, we can negotiate an entry at some point in the days that follow for a shot at seeing a continuation. So after this major rejection day, the goal is look to the midpoint of that rejection day. That's that little white dot right there. Look to the level that was rejected. That's the previous week's low right there. That's now your zone. That's the ideal zone to defend as a swing bull for a shot at higher highs on a multiple day basis, 3 to 5 days at the very least, with a shot at seeing further strength beyond that. And so let's take a look at day 2. All right, so here's day 2. I'm gonna go ahead and push play on the playback, and here's the open price. Here's the open price. Now, price pushed up first and rejected the previous session's high and then rotated back down. That's not usually ideal, but the previous session was a major rejection day. The idea, again, was 23.30 to 23.32. That was the idea, and that's just a roundabout estimate, right? Because the midpoint is actually 29.75. It's that pivot. And then you have recent rejected lows right here at about 32.5. So anywhere in this zone could be an opportunity for bulls to trap. So say price were to drop into this area, you look for a trap and you rotate it higher. Right now, what's actually happening in the market is after the open, price went bid first. It went bid first. That's likely getting market participants long before the flush comes. And these early longs right here may be used as fuel if this thing comes down into our zone. Look at this right here. You're starting to see buy imbalances up here. You never want to see buy imbalances on highs if you're a bull, because those buyers need to get paid. Otherwise, their sell stops come out and fuel the return. So these late buyers got stuck, 2,951 contracts stuck, and look at how this thing drops. 2,200 contracts come in at VWAP and they can't get price to go up, another rotation downward. So now we're coming into the previous lows. Now it's a zone where anything into this area offers a swing buy for a move up. And again, if you've read the book Secrets of a Pivot Boss, my book, the idea is if you're going to start an uptrending market, you want to defend at the pivot range. This is the top of the pivot range. That's the mid pivot right there. And of course, 29.75 was the bottom of the pivot range. So anywhere in this pivot range offers a significant buying opportunity for a swing move up. That's the goal. This is not one of those days that's very clean and clear. It's not very easy, but they're not always easy and beautiful. But one thing I do see right now is passive participants absorbing these sellers on these lows, and that's leading to higher prices. When you have major sell imbalances on lows that can't get paid, those late sellers are the early buyers that are being forced to cover, and they will fuel your move higher. That's the idea. Right now, look at price going above VWAP, but we have this high that needs to be taken out. So look at that move. What a great move right now. Big push up as this thing stretches to highs. This is a great impulse move at the moment. Now, again, in terms of identifying the swing entry on day 2, you can negotiate it like a scalper. You can stick a limit order and ambush the pivot range if you want to. You can buy options down there. You can do anything you want to get in that trade. Doesn't mean that you have to actually play this futures chart. There's many ways to negotiate an entry into this zone. But again, that's the zone down here that if price comes down, you're trying to look to engage that market. That's the best buy zone. And look at how price has rallied off that area so far. Now, overall, if you are in a trending market, so the previous day was a significant rejection day. Here's the midpoint. We're talking about something like this, defending here for a shot here. If we are trending up or about to start trending up, then ideally on the pullback buy, which is somewhere in here, that's the area that would carry you through the previous highs. This is the previous high right there, at the moment being rejected. So by the end of the day, we need to be above that high, right? Ideally. And if we can push through that high and close beyond that high, there's a great shot that this thing continues higher, and we may be in a very solid uptrending market where then bulls will be looking to defend pullbacks to the midpoint and the pivot range as this thing continues higher until it finds rejection. Now here's a big swing move against the range. And again, notice how many sell imbalances come down here and can't get paid, right? And that starts to fuel this thing up. These sell imbalances were in, but they were getting paid. And then down here, not so much. This was a higher high rejection there, rather higher low rejection right here, and this thing pushes up. Right now, you're seeing another pullback here, more sell imbalances in this zone building. They're not yet trapped, but it's energy. It's potential energy that if those sellers, look how many there are. Look how many sellers come in, and right now price is ticking at or just above it. That is a recipe there for all of those sellers to get squeezed if they don't get paid. And again, price ticking higher. So again, it's about following those imbalances, following who is positioned where. Because if they do not get paid, their stops will likely get triggered, and that's a momentum move that you want to ride, right? And so right now, we're seeing that kind of play out. That's kind of the story of the order flow. And price at the moment, still not really pushing above the previous high, but we do have these highs that are coming in, and now pushing above those highs could spark a move here pretty soon. This recent pullback, look at all of these sell imbalances right here on that recent return to 39.5. So 39.5 is a big area where limit orders are being filled at the moment. Big time zone. Now we're up here testing previous highs here. We're going through it. And again, this thing starts to push higher. Again, look at all those sellers right there. Count them up. Count them up. Look at that. 6,000, 3,000, 2,500, another 1,000, 2,000, 1,100, 1,200, 1,100. All of those sellers, what, 20,000 contracts worth of sellers, and they can't get paid. So this is 20,000 contracts worth of sellers that have just gotten their stops run. And that's what fuels the move through the previous high. That's what fuels the move through these highs. And now we're pushing back above the previous week's close. Now we're pushing above the FOMC level from December 14th. Those are important pivots. Very important pivots. Anytime you push through those levels like you do, a retest of those areas becomes a very important focal point for bulls to defend. So right now, look at this drive through 46s. That's a very important level. An FOMC level is significant. So now if a push into that zone is defended and you see the sell imbalances come in and they don't get paid, that's an opportunity to defend and squeeze. If price pushes down into the previous close, likewise, right? Looking for sell imbalances to squeeze because those are important pivots, and right now the market is overtaking those levels. Here's 46, here's 44.75, here's 44.75, here's 46. Right now, 9,000 contract sell imbalance goes bid. Here, some more sell imbalances coming in, and so far you can see passive buyers are defending at the moment. Here it is. You got another 7,000 contracts of sell imbalances at 46 quarter and 46 half, and price is ticking above it. So far, look at this. Another 12,000 contracts come in and price starts to push up a little bit. So there's clear support at 46 quarter at the moment. You can tell that bulls are keeping that area bid via absorption of the aggressive participants. Here's a clean test of 46s now. Another 6,000 contracts here that can't get paid. Look at that clean test right there. Look at all those sell imbalances. This shows you that sellers are trying to push through those 46s and they are not getting paid. Remember, if you enter the market as a seller, you're either going to buy down here for a profit or you're going to buy up here for a loss. Right now, they are covering for a loss. These are the buy stops coming out, and look at that thing fuel another move higher. That is exactly what you would look for in any market. When you're moving, when you're trending, you're looking for those trapped participants. This could be a scalp in and of itself if you wanted to trade that scalp, right? These participants are a scalp opportunity. This was a swing opportunity down here, but all of those participants that we've seen in here that have gotten trapped have helped fuel this market higher, and that is important. The other thing, we were looking for price to close above the previous high. It smashed through it. It closed above the previous close and continued higher until it closed above 5-day value. That was pretty strong. This thing was very, very strong. Now, take a look here. If we look back at the daily chart, this is the day in question right here, right? Our goal was, after this rejection day, look to defend between 23.30 and 32. And price got down 6 ticks in front of that zone, and look at where it closed the day. Look at how high it got by the end of the day. Huge, huge continuation, and it happened within 6 ticks of our zone. And again, major sell imbalances seen throughout the day as this thing continued higher. Major rejection day followed by a great, great absorption and a reversal. Now keep in mind, look at this right here. That is the midpoint. This is the midpoint, and that's the previous close right there. Now check this out. Now keep in mind, here's a couple of things I want to share right here. If price opens the day at the midpoint, that's not a zone where you want to defend. If it opens the day at the midpoint, not a good shot. You want price to open above the midpoint and come into it for a defense higher. But what you don't want to see is price come up here first and reject the high and then try to come to the midpoint, because then bears have successfully trapped late bulls and bears are getting paid and fed. So they have the upper hand as we come into the midpoint. So ideally, you open above the mid, you come into the mid zone where you're looking for that absorption, and then you defend before anything happens beyond the high. This one played out very, very nicely. It did reject first, but it was a battle, and then eventually those bulls won out. So a big time move up in this case. Now take a look at how it continues higher. I mean, this was the major rejection. This was a follow-through day. Here's the midpoint again. Here's the low just above it, and it squeezes. Here's the midpoint again. Here's where bulls trap, and it squeezes, right? A very nice continuation until price finally tops out at around 67, 68, and then rotates back down. But again, that shows the power of an LVN. We were looking for the LVN to be defended, and we wanted to see a return back toward 54s, back toward 70s, back toward the top of the range, which we eventually got to over time, but it endured all this. But again, if you can identify a significant rejection tail, you can then look to negotiate your entry afterward. And it's not about really analyzing this intraday. You can let this finish the day like this. You can bring it up the next morning and see that that was a rejection tail, and then you'd be looking for an opportunity to negotiate your entry with minimal adverse excursion, try to get to a T1 quickly, and then look to capitalize on the move that follows over the next 3 to 5 days. That's the opportunity. Here's another question. If after a major rejection day, the next few days stay within the high and midpoint of the rejection day, does that mean that one should consider the move redundant? So let me see here. I'm trying to find an example here. Basically, after a rejection day, this is what I usually say. After a rejection day here, the market can sit here for a day or two and build energy off that zone as bulls defend. And that's okay. That gives you an opportunity to continue to defend that level on an intraday basis. So you can continue to trade it as a day trader. You can defend position as a swing trader. But on day 3, if by day 3 it's not going, chances are it's not going to go. So after rejection day, it may sit there for a day or two, and that's okay. Actually, that's preferred sometimes because it's building the energy for that. If you're not going to get a full-on runaway day like this, then holding for a day or two builds that energy. But by day 3, if you don't go, it likely won't go. And so that's usually kind of my rule, day 3. Good question. Thank you for that. Here it is. This is it. This is crude oil. Major rejection day here. And I mentioned the idea is to defend the midpoint, this little faded dot there, and then these little blue dots there. That was the zone to defend for bulls. However, this morning we took out that high first and started to work down. And I said, oh, that doesn't make me feel too good. But it held. And then the next day it held again. And this is when I was like, it's okay. It's okay to hold this is good. But if by day 3 it doesn't go, it's not likely going. And that's when prices started to dribble through it and drop. It did not quite hit the low there. That's the one time out of 10 that it did not take out that low when it hits through the midpoint. And subsequently, that ended up being the big rally that came after. But that's one of those opportunities right there where it does take 2 days to digest. On the 3rd day, it tried to run stops and it failed to get to the low, and then that sparked a major return back up the ladder. But definitely, it can take a day or 2, sometimes 3 to build out, and this would be a 3-day absorption signature right there. Good questions. Thank you for those. All right, that concludes this session with studying entry scenarios with Playback. Again, this is a very powerful form of training here when you're able to go back and study past scenarios that you will encounter again in the future. If you understand how to engage those scenarios and can be confident in identifying rejection, confident in identifying trapped buyers and sellers, confident in identifying where the proper trade location is, via your study of these scenarios, you'll be able to better engage the market as a more confident and knowledgeable trader. So that's the goal, being able to identify ahead of time what may play out and then being able to analyze in the moment that scenario is indeed playing out. Studying these entry scenarios with the Playback feature is always a good idea. The goal is to study those major setups that you want to engage. Absorption signatures, right? Trend days, rejection days, entering after rejection days, all the major things that you want to do or want to trade, you have to have a playbook of how you're going to engage those. And that's what we do here at Masters. And again, we're going to continue to provide more of these Playback type of scenarios. As always, thank you for being a part of our training, and I look forward to seeing you soon. Take care.